Usable equity. So you've heard about usable equity, but you're sitting here kind of going, what is usable equity? I have a property. I understand it's got something to do with my property, but what is usable equity? Well, my name is Edwina Dixon. I'm a mortgage and finance broker, and I am here to tell you exactly what usable equity is, why it's actually important to you, how you can calculate it, and I'm even going to give you an example so that you understand exactly what usable equity is. If you're new here, this is my channel. Hello! Please like and subscribe because it really just helps the algorithm to understand that this is information that you're interested in. A big part of understanding what you want me to actually make videos about comes back to, well, do people actually want to watch this? The advantage for you to actually like and subscribe means that you're actually indicating to YouTube that you want more information about this kind of stuff. Not just from me, but also from other content creators out there as well. So it's in your benefit too to hit that like and subscribe button. So let's actually start to define what is usable equity. Well, usable equity is a certain amount of money that you can access in your property to be able to spend it on other things that you perhaps want to do. So you might want to, say, put in a pool like a recent client of ours. They decided that they really wanted a pool. They lived in Queensland. It's hot. It's very hot in Queensland. They probably need a pool. And so that's what we did. We looked at how can we actually use the usable equity in their property that they hadn't tapped into yet to be able to get them the money to build a pool. Now, if you'd ever thought about building a pool before, I'm telling you, they're expensive. If you can use that usable equity that you've got in your home, fantastic. So how do we actually work out what usable equity is? Well, I have this exciting little house toy here, which is going to help me actually explain. And in this example, I'm going to actually use inside of my little house a whole bunch of blocks. Can you see those? Yeah. If we assume each one of these blocks is $100,000, and this particular house altogether is valued at $1 million, let's work out how much usable equity these people have. So these clients have a property valued at $1 million. Fantastic. What they then have is a mortgage that's valued at $700,000, which means they've got 7 of these blocks. This is what their current mortgage is, $700,000 of their $1 million valued property. What that then tells us is that inside the rest of their house, there's $300,000 in equity available. But here's the kicker. Not all of this $300,000 is usable equity. And in fact, on this $300,000, only $100,000 is actually usable equity. From the bank's point of view, only $100,000 is how much these clients would be able to take out and add to their home loan, leaving $200,000 of equity in their current property. That's $200,000 in their home that they can't touch. Now you might be wondering, hold on, why on earth does $200,000 in equity need to stay in the home? Why can't these clients take that $200,000 out and have it as a loan and as usable equity? And the answer is because the banks are looking at it going, there needs to be a certain amount held to keep the property secure. They don't want to overexpose you. They want to make sure that actually you're still going to be able to repay it. So let's go over this again. This property, our client's property, was $1 million. Their loan was $700,000. They can increase their loan by using the usable equity, accessing that usable equity, and taking out $100,000. This then leaves them with $200,000 sitting there as equity they could only access if they sell the property. But using the equity that they can access, that usable equity, that opens up so many doors. You can do so many things with that usable equity. For our clients recently, they decided they live in Queensland, they need a pool, have to have a pool. And so they used the usable equity in their property to purchase a pool. We've had other clients that have used the usable equity to be able to build a modular home at the back of their house to be able to secure additional income. They want to set it up as an Airbnb. Great idea. Or if you're like other clients, they've taken it out, they've used that money to be able to invest into the stock market. It's called debt recycling, and maybe we'll do a video on that. It's pretty complicated stuff. But there are so many different things you can do with those funds. You may decide that you want to start a business and you need some capital to get going. That $100,000 that you may have as usable equity could be the way to do that. So why is usable equity important for you? Well, because the usable equity that you have in your home can open up all sorts of doors to a future that you perhaps hadn't dreamed of before. But it is there. Your property is an incredible way to be able to save, but also to open other doors if you need those funds, that usable equity, to be able to do all sorts of exciting things and to be able to really live a life that you're hoping to live. Only downside is make sure you pay back the bank. So understanding that you may have usable equity available in your home is definitely the first step. If you want to then use that usable equity for something else and you want to be able to access it, well, that's where you really need to start speaking to mortgage brokers. I'm a little bit biased and I would say reach out to us. There's a link below. And I would say this is certainly a lot of what we actually do on a day-to-day basis, because our clients come to us for the more complex situations, and accessing the equity in your property so that you can use the usable equity and make sure that you do service for those loans and you will get that finance approval, that is complicated. And I would say that's where you perhaps want to get in touch with us. But as always, thanks for joining, and I'll see you in the next video.